Okay, good afternoon. Good afternoon, one and all. Hopefully we are well. Gosh, that music just gets worse and worse. There's a feature here on the streaming software where I can select the different styles of music, and I always click corporate. I don't think that's very corporate one, was it? Got the old foot tapping though. Happy Monday, Nelson. Indeed, happy Monday to you. Hopefully you're doing well. Hello to you all. NASDAQ 2024 is in the house. As always, drop by, say hello, let me know where you're listening in from. It does help with the stream if we have interaction, if I know there's people listening in or where you're listening in from. So as always, let me know where you're listening in from if you haven't done so already, and also let me know the level of experience you're at. As I always say, I want to make sure I pitch this at the correct level. I don't want to over pitch it or under pitch it. I want to make sure that people understand what I say and actually get something from it. If this is your first stream with me, I've been doing this now for about since 2015. So it was 10 years now being coming on doing these live streams. Which I really do enjoy. I love the feedback as well. Maximus is in from Ghana. Thank you for that, Maximus. Aaron, good afternoon to you as well. Barish is good. Barish, you came very close on the Guess the Gold. Very close. But unfortunately, it's not such good news. I'll come to that in a second. If this is your first stream, welcome. We do this each and every week. Basically, it's a look at the week ahead. What we can expect. We also look at where the markets are at the moment and basically what has been driving the markets. But we basically map out what to expect in the week ahead, look at some charts as well. We also have a Guess the Gold competition, which runs every week. Okay, runs every week. And that basically means you've got to guess the price of gold for the close on the Friday. Yes, I know, Barish. Yours was 63640. Yes, I got yours there, but unfortunately, I'll tell you in a second. Okay, so where did gold close? Basically, gold did as we really were expecting. We spoke about this last week. Gold had a real big push higher. I called, my guess was 3625. Just before the inflation number on, gosh, when was that? Thursday. It was trading literally at 3625, and I thought, well, that's not going to be the winner, is it? Not that I'll win my own competitions, but yeah, it was basically closed. Let's just go to the weekly chart, and I'll show you exactly where it closed. We closed at 3643. Okay, 3643 was the close of gold, and this is taken from the Oanda price feed on TradingView. We're not linked to Oanda in any way. It just happens to be the first one that comes up when you type in XAUUSD. Gold really can carry on going. I mean, obviously, we'll talk about it over the next half an hour or so, but gold's really benefiting from benefiting from a number of things. It's benefiting from the safe haven play with wars going on all over the world. It's basically benefiting from the low yields that you're getting in the bond markets. It's benefiting from the weaker US dollar. It's benefiting from the belief that the US are about to start cutting their interest rates. Again, more about that in a moment. But all this is favoring, which is basically negative for the US dollar. But the US dollar trading weaker pushes gold prices higher. And when we're in these levels, it's very difficult to pick a top, and dangerous play as well, picking tops in gold. I can tell you just by looking at the data of prop firm analysis and prop firm data of what makes successful traders. Successful traders are those that are running the higher time frame trends. I can tell you that now, not necessarily those that are on the lower time frame charts on the 5-minute chart and so forth. We look at all the data here. The risk team look at the data. I had some analysis done recently for a live webinar that I did, or a webinar that I did. It's now not live, obviously, it's now on demand, but basically showing you the secrets of the successful traders, and holding trades on the trend is one of the most profitable strategies that our successful traders are doing. So at the moment, where do you stop gold? Gold's up 10% this month. I mean, 10% for gold. I mean, it's a massive, massive move. And I don't know where you'd expect, it to, I picked, often when you see a breakout, you see this breakout from this sort of range that we had for a while. Often you see a breakout, basically, for 100% sort of level of the breakout is often where your target. Well, I think now, if you look at maybe this as a zone where we were in a range for quite a long time. So look here at this sort of range here. We sort of hung around there for, quite a few weeks. If you look at that breakout range and you double it up, it basically takes us up to 3676. And that's almost exactly where we have rolled off last week. And it's almost to the pip, the 100% of a recent range. So that's, I think, quite significant. Where we go from here, well, it's anyone's guess, isn't it? It really is anyone's guess. I guess now we're at 3,600. I guess the next sort of, logical move is to go at 3,700. But quite frankly, I mean, I think it was Goldman Sachs or JP Morgan, one of the big central banks, said a few months ago that 4,000 is a good reasonable target for gold. $350 from here. Why would it not get there? I mean, why would it not get there in a rate cutting cycle? So yeah. Right. So let's have a look then at our guess the gold competition for this month. And where is it? He says knowingly, there it is. So guess the gold competition for this month. So the price was 3643. And I can tell you we had some really close ones this week, and which is when you had a 4% move in a week in gold, and you get a number of people getting very, very close to the actual number. I've done this for many years in other areas, and I don't think I've ever had a week where we've had such close entries. Bearish came in at 3640. We had Dina, someone called Dina, come in at 3648. But the winner for this week's competition is Abdel Mahad, coming in at 3641. So there we are. Congratulations to Abdel there. Very, very close, just $2 away. And that is, when you had a 4% move, kudos to you. I hope you were able to make some money in the markets, trading your convictions. Not that I would trade a conviction. I've got a trade strategy, but there you are. So that was a great competition this week. Abdel, send me an email to education at fundedtradingplus.com, and I will send you a coupon code. You win the $12,500 experienced trader evaluation. So well done to you on that. Right. Okay. So now we're opening up this week's competition, starting now. You got until the end. Well, you got until the end of this stream to get your entries in. Let me just post the coupon in, not the coupon, the Google form in to the chat. And then you can get your entries in. Okay, there is the form. Yep, congratulations, Sinister. Yes, only one winner. So well done to you. Yeah. Okay, so get your entries in. I'll keep an eye on them. We'll have a look towards the end of today's stream at the entries where we've come in. Personally, for me, I think we get very, very close to 3. In fact, I'm going to put in my guess now because I always like to refer back to my guess. My guess is going to be 3648. 3685. Oops. 3685 is going to be my guess for this week, and it's only a guess. There's no way I'm trading on the back of that. Right, okay, well done. So let's have a look then at the markets. Busy week last week. Fantastic week for you trend followers. If you were trading the stock markets, if you're trading gold, if you are buying, I know a lot of you don't buy bonds, but if you're buying bonds, another great week for bond buyers. Obviously, yields hitting the lows. You know, when prices of bonds go up, the yields come lower. So we had a big run. All-time highs reached in the NASDAQ 100. We had all-time highs in gold. We had all-time highs in the S&P 500. Smashing week for trend followers. As always, quick disclaimer, education and entertainment purposes only. Do not take any of this as investment advice. Do not trade on the back of what I say. I trade strategies. I don't trade views and opinions of others. I don't trade what I think is going to happen. I trade what I see happening, following the rules of my own strategies, which, as you know, you can all get familiar with and start learning about if you want to enjoy our education material, which you can do by taking out an accounts of 50,000 or 100,000 above, and use the code PropIQ at the end. That way, you will get to experience and see all our trading strategies that I teach. I'm actually going to be putting in some more strategies in there as well. Not the ones I necessarily trade, but strategies nonetheless that have proven the test of time. If you're not trading with a strategy, then I really think you should be rethinking that. But anyway, this is not meant for investment advice, just purely for education purposes. Okay, so what were the main drivers of last week? The main drivers last week, let me just change that. I never like that color there. Let me just change it down to dark green. There you go. Maybe that green there. So last week, the main drivers, we had US Consumer Price Index. Slightly defies what we expect, really, doesn't it, from the Fed? But US Price Index, Retail Consumer Price Index, comes in at 2.9%. Remember, the Fed have a balancing act to contend with. On one hand, they need to get inflation down to 2%. That's what they're mandated to do. And on the other hand, they're mandated to get maximum employment in the US. Well, unemployment is certainly a bit of an issue going on in the US at the moment. Labor markets are quite tight. A lot of revisions to non-farm payroll recently and low numbers in and on themselves. So in the labor market, there's definitely under pressure, but inflation is still running quite high. I think the general belief is from the Fed that with the labor market being so tight, that ultimately will have a negative impact on inflation. So that's really taking the view of the Fed at the moment, and that's why we're expecting some rate cuts to start this week. We'll get onto that when we look at the economic calendar. So yes, US consumer prices came in line, but the US dollar, well, the US dollar was pretty flat on the week, wasn't it? Then we had the European Central Bank rate decision. So they left their interest rates unchanged, and that was widely expected. But they had a downward revision of their sort of inflation projections going forward, which basically, to me, indicates that interest rates in the Eurozone have basically reached sort of a level where they're going to basically stay for a while. Now, if you are looking at other central banks cutting interest rates, you've got a massive week this week for interest rate decisions. You know, there's 4 interest rate decisions this week. But if you're thinking that the ECB, European Central Bank, are keeping rates unchanged, and the US and maybe Canada cutting interest rates, doesn't that make the euro a stronger currency on that interest rate differential? Possibly. Euros is certainly pushing high at the moment with against the US dollar, flirting with that all-important 118 level. I'll talk about that when we get on the charts. But yeah, European Central Bank rate decision unchanged, supporting the euro with the lower projection of inflation going forward, i.e. no more reason to cut rates. So there you have it. So what are the main drivers? Well, the dollar, as I say, was up. Sorry, the gold was up about 4.2%. Dollar was unchanged really on the week, down a smidge. DAX was also down, very small. But these stock markets, S&P 500, the NAS, all up, quite strongly, hitting all-time highs. The Dow sort of lagged behind it a little bit, but certainly the S&P 500, which is the top 500 stocks in the US, and the NAS, which are the top 100 tech stocks, up 2%. Tesla was one of the is a main component of the NASDAQ. That was up 7%, as what's his name, Musk was sort of given the thumbs up by the board that he's still very active in running the company. So the Tesla stock went up 7% on the back of it. Whatever. Bitcoin was up 3.5% on the week, which was not really a big move for Bitcoin, I guess, in the end of the day. And WTI didn't do very much at all. Just bear with me a second. I want to make sure that the guesses are coming in. Yes, the guesses are coming in for gold. Good for you. Yeah, lots of guesses coming in. Lots of guesses coming in. Uncle Jay's going for 3620. Well done to you. Dina, you missed it. Just missed it. You're going for 3673. I think that's a good guess, Dina. I like that one. Nice one, Dina. And we've got, what was about last week's winner? What's last week's winner coming in? Last week's winner, Abdel is going for 3636. Well, there you have it. Very close. Well, I don't know if it's close or not, but you're seeing a bit of a sell-off for you. Mostly not a bad guess either. Anyway, we'll come to those in a moment. Okay, so let's have a quick look then at what we can expect this week on the economic front. As I say, really busy week in terms of central bank rate decisions. We've got, in fact, 4 rate decisions this week. But before that, we do have consumer price index coming out of Canada, due to come in at 3.1%. Remember, they're still mandated to have their inflation there at 2%. So inflation still running high there. So inflation still running high there. We do have Bank of Canada later on in the week with their rate decision. So this one, I think, will be quite an important data read. If inflation comes in much higher than expected, then maybe they will be less inclined to cut interest rates, but they are expected to cut interest rates. So do keep an eye on this one if you're trading the loonie, the Canadian dollar. So that will be out on Tuesday. We've got another data, which is like an inflation data really, out of the US. Retail sales expected to come in slightly higher, up 0.4%. Obviously, that's important, retail sales, because if retail sales are pushing higher, then the likelihood is that inflation stays higher and pushes higher. Retail sales are low, which, to be honest, I mean, I'm slightly surprised at why retail sales are so strong with unemployment pushing up and job numbers being quite tight, but the sales are still there on the high street. So it's a bit of a correlation there, but I'm surprised that, that it is so strong. Maybe there's lots of spare capacity out there. Who knows? But pay attention to that. That's out Tuesday. So on Wednesday, we've got all-important CPI, Consumer Price Index, out of the UK. And that's expected to show inflation running at 3.8%. Okay, so 3.8% is almost double the inflation target that the Bank of England have to try and get to, which is, again, 2%. Again, we've got a rate decision out of the UK later. That will be watched. If this number comes in massively to the downside, and I don't see it happening, but should it come in massively to the downside, 3.3 or 3.4, it's not normally deviating that much from expectations, but if it were, there may be a call for another cut in interest rates. I don't think it's going to happen, but I'll talk about interest rates in the UK on Thursday, well, in a minute. Bank of Canada has the first rate decision, expected to cut rates 2.5% on Wednesday from 2.75%. But I say we've got that inflation readout before that, so pay attention to that. That's pretty much priced into the market, a cut in interest rates in Canada. And then we have the all-important FOMC, stands for Federal Open Market Committee. It's basically the Fed, and their interest rates are expected to drop to 4% from 4.25%. So that would be the first cut in interest rates in this current cycle. And you can see here on the CME's FedWatch tool, which we do pull up from time to time, there's now a 96% chance that the Fed will cut interest rates from 4.25%, where you see here, down to here, 4%, and that's pretty much priced in. This has changed. Okay, we had a 10% chance. Was it last week? Yeah, last week we had a 10.6% chance that we were going to see 50 basis point cut. Okay, that's now changed. One of the reasons why the dollar is finding a little bit, I think, of support. But this is the futures market, by the way. These numbers aren't just pulled out of the sky. This is reflecting the swaps futures market. So we're expecting to see that cut. But if you take it out to December, okay, end of the year, there is a 78% chance that there will be 2 further cuts. So these are the ones that I think you want to be looking at, because the September the 17th meeting, that's pretty much a done deal, 96%. This is one that's going to be more volatile. Are they going to be cutting twice more for the rest of the year? Are they going to have one more cut for the rest of the year? This is what basically will determine the direction of the dollar. Okay, so at the moment, there's an 80% chance that we're going to see 2 more cuts, a total of 0.75 basis points by the end of the year, which is one of the reasons, if that was to materialize, or indeed a possibility that they even have, a full percent by the end of the year. If that were the case, then you're going to see the stock markets, S&P 500, the NASDAQ, gold, all push higher, and the dollar push weaker. So if you want guidance on where the dollar is going, here's your idea. Here's what you should look at, and obviously with that, you can maybe get a bias on the stocks and gold as well. So there you have it. I mean, likely to see a rate cut first of the cycle as of Wednesday. On Thursday, we have Australian employment. Okay, expected to come in at 21.2k from 24.5k. I don't know where they get these numbers from. They're always so inaccurate. The deviations from what's expected to what normally comes out, it's normally so great, it's just almost farcical. I would say if you're really bad at your job, become an analyst for the Australian and Canadian employment numbers, because I don't know what they do. They think they just throw a dart at a dartboard to pick their numbers. They're so wrong all the time. But the unemployment rate is about 4.2%, which is unchanged. 4.2%. That's normally pretty bang on, but there you have it. And then, of course, we've got the Monetary Policy Committee rate decision in the UK. Expected to see unchanged rates at 4%, I should say. Now, you remember last month we had a rate cut. There's 9 panel members, and the vote was 5 against 4. 5 agreed to want to cut. 4 said no cuts, unless there's a real big move in that inflation report this week. Then you can expect them to stay unchanged. It will be interesting to see the split. The split at the moment they're expecting is 8-1. So one panel of the 9 is voting for a cut, but 8 are expected not to cut. So it'll be interesting to see if the split is more of a cut, although they will mostly not cut. But if there's a 7-2 or 6-3, then it shows that maybe a cut's on the cards for the next month, and that's when you'll see sterling potentially come under pressure. Last week we did not on my previous slide, but last week we had GDP numbers, gross domestic product numbers out of the UK, which showed a pretty flat economy. Okay, so flat economy basically normally means interest rates need to be cut to spur on the economy. Obviously they've got the inflation story to fight, but yeah, if if they do vote 6 and 3, then expect sterling to come under pressure on the Monetary Policy Committee meeting on Thursday. Right, let's have a look. Helen's come in at 3660. Helen, you've not a bad. I think there's no real outliers here, just on the guesses. We've got Fabian. Actually, Fabian's coming in the 3,400 level. He's expecting a big drop. Thomas Klopp is coming in at almost 7,000, almost 700, 3,700. 3699. Who's the biggest one? 3765 comes in from Paolo. 3765 is the highest so far. Nope, got another one. Ray Dalio, who won it last week, if I'm not mistaken. Ray Dalio is coming in at 3,800. Adita is coming in at 3,850. 3,850 is the highest. Oh, no. 3,850 is the highest at the moment. And the lowest is 3,487. Yeah. Finally, on Friday, we've got the Bank of Japan. Their policy interest rate decision is expected to come in at, expected to be unchanged at 0.5, less than 0.5 from less than 0.5. So we can expect to see, attention being given to the Bank of Japan. Remember, the Bank of Japan, Japanese economy is going in a different direction than the sort of Western world, as it were. We're all talking about cutting rates over here in the Western world, whereas Bank of Japan are talking about increasing interest rates because inflation is pushing higher over there, above 2%. And I know they've just had a prime minister change in Japan, haven't they? So it might be the wrong time. But I think you need to pay attention to this because if the Bank of Japan do start moving their interest rates higher, wages are pushing higher in Japan. There are inflation pressures in there. If the Bank of Japan do move it on their interest rates, there's a massive unwind in the carry trade. The US dollar against the Japanese yen. You know, we've had big moves in that currency pair. I'll look at it on the charts in a moment. So their rate decisions on Friday, unlikely that they will change, but not 100%. And also they give their sort of forward guidance as well, which you need to pay attention to because we could get some clues as to maybe the timing of a hike in rates if indeed they don't hike this month as expected. So there you have it. Quite a busy week in terms of the rates for central bank rate decisions, some inflation numbers out of the UK. So lots there going on. I don't expect markets to be where they are this time next week to where they are today. So who knows? Oh, by the way, there is this has just been released. By the way, some of you there that are interested in getting your some of you are interested in taking out the Master Trader program. This is instant funding, by the way. This basically skirts out or removes the evaluation phase, so you can get instant funding. So you can be trading live simulated money now by using the Instant 20, and we're offering 20% off until the end of September the 30th. So go and check those out, all the way up from 12.5K up to 100K accounts. You can avail a 20% discount. They've never done this before here at FTP. I've been reliably told an hour ago that they've never, before me, they've never had this discount out there. I think they've done a 10% in the past, but now this is the first time, and I'm not sure they'll be doing it again after this. But there's a 20% discount code off the instant funded accounts. Use the coupon code instant20. Now, of course, as I've mentioned earlier, if you want to get all the education that I offer, let me just give you a quick look at that, if you haven't seen it already, hang on a sec. Let's have a look here. Got to log into my own account. Hang on. Okay, so if you want to have a look at this is basically all our education. Okay, loads of videos here. I think there's about 50 individual lessons in here, more than that, in fact. Everything beginners, intermediaries, professional mindset, about strategy testing. We've got technical analysis. You've got psychology. Also got Simon's psychology course in there. You've got the strategy videos where we have the boomerangs that I talk about, which I'll look at the charts in a moment. We've got all these videos. There's actually a quiz here. There's about 450 questions in the quiz as well that you can take and get a certificate at the end if you do well. If you want to get all that, as I say, you can use that coupon code at the bottom. But because we're doing this thing here with the coupon code instant20, you can only put one coupon code in. Yeah. So if you want to avail the PropIQ material and you take a 50k account out, well, actually, just for this stream, and I'm not going to put this out on ads, but just for this live stream now, any of the accounts you take, 12.5, 25, 50, 100, I'll give you access to all this. I don't give it out there for people that are not really serious about trading. But yeah, if you email me, if you say that you've just taken the instant 20 today to get the 20% and let me know, then I'll give you the access to the PropIQ as well. So let me know that you've just taken the instant 20 offer. Send me an email, education@funded trading plus, or of course, Andrew@funded trading plus. Send me an email and then I'll just give you the access and login details. And also comes with one-on-one with me, private session, which you value that or whatever you value it at, but normally that's, people that come onto this do find it hugely beneficial in their trading. We talk about where you are in your world of trading and where you want to get to, and the best approach that I think you should do to get there. It's normally certainly minimum of an hour. We go on for a little bit. So if you want to take that just for today on any of the accounts, let me know and I'll get you signed up. I'll send you my calendar invite. Right, let's have a quick look then at the markets. As I said, I think we've got some big potential if rates move and the sort of the forward guidance is inflation's under control, economy's doing well. That basically means 3 cuts are going to be on the table. These stocks, this gold is all going to be on the march higher. I would have thought you've got to just get in onto the trade. You can use my boomerang trend following. Let's have a look if there's anything there on the 4 hour on the boomerang trend. Okay, it's basically where you look to just remove all the drawings. Well, we're in a bit of a range at the moment. Okay, so this is the 4 hour range. Just on a target again. Just on a target, taking in mind what I said about the range. This is the range since last week. That's the weekly range, okay? And we're bang smack in the middle of it at the moment. Bang smack in the middle of this weekly range, looking at this low to that high. So for me, gold trades higher, and I know I've got my guess, but the target for gold would be 100% extension of that level, 36, 37, 38. So that puts Rand Howell at that's 3.5 you had, sorry, 3.7, who is it, 3.776, 3.739. Well, that would be a realistic target for gold if it breaks out. At the moment it's in the range. You need to see weaker dollar, you need to see some negative or dovish comments from the Fed on their interest rates in the week, and I don't think you'll have any trouble pushing up to those levels. Just as I mentioned a moment ago, I think one of the currency pairs that you should not ignore is this currency pair. Okay, so this is the euro against the dollar. We're getting into some levels we haven't seen for quite a while. We got up to 117.80 at the, when was that, at this day last week, and then we had the pullback, and then we're going again. We've got potential now to get up to 118. I don't have a hat. Well, I have actually, but I'd eat my hat if we don't get to 118 at some point over the next couple of weeks in this. You've got really, two different types of economies going on at the moment. You've got one economy, the Eurozone, that's basically, going to keep rates where they are now. And they've basically stopped cutting their rates. You've got one economy that's about to start cutting their interest rates just on interest rate differentials. You could potentially see a flood higher into the euro. So euro is still going to be looking reasonably strong, and you've got those other weaker currencies are looking weak against you. This is the euro, the light blue line. The green line is the dollar. This is the daily, but if I take that to the 4-hour chart, might take a couple of seconds to load up. But there you go. Let's just have a look. So this is the dollar, the green line, 4-hour chart. You've got the euro and the pound holding up, are the best performing currencies against this dollar, and the Canadian dollar is must be looking quite weak. So euro CAD might have some interest there as well for buy. But the euro is looking really reasonably strong. You don't necessarily have to trade it against the dollar. You can trade it against, as I say, the euro against the CAD. So euro against the CAD. Let's have a look to see if there's any interest going on in there. Well, first of all, as always, I would take this to the daily chart. If I look on at the lower time frame charts and the daily chart, well, you tell me where this roadblock resistance is. You got 118 against the dollar, big level of resistance. Where's the roadblock resistance in here? I don't think there is one. And I think, again, we're in a bit of a range here at the moment. This is just, when you're, as I say, when you're at these all-time highs or period highs, a breakout pulls back to the previous level. That's the boomerang in there, the boomerang style of setup that I'm looking for. Pulls back to the previous high. That's the liquidity zone. For me, a continuation of that level, which is basically an extension, 100% extension. We've got room all the way up to 1.6332. That would be my level there. And if I'm wrong, my stops are going to be below here, but you can try to get into here or maybe minor pullbacks. But the euro CAD must be looking quite strong. Remember, Canadian economy is going to be calling out for interest rate cut this week, and it's likely that they will get their interest rate cut this week. Oil prices are low. Oil prices have been didn't move last week, but oil prices are low with oversupply and OPEC and Saudi all sort of increasing supply. So Canadian economy suffering again with the Trump tariffs. It's a weaker currency. So euro CAD possibly to the upside. Here's one I want you to think about. So this is the dollar against the yen. Let's just go to the weekly chart, dollar yen. And I'll talk to you a little bit about this carry trade. So when back in 2022, which is like a COVID time, we had interest rates surging in the US and rates low, negative rates in Japan, as you know. But rates started moving in the US. So what we had was what's known as a carry trade, where traders will basically move into the dollar, which is giving a better return on its bonds than the holding Japanese bonds. So you see the strengthening the dollar against the Japanese yen as the interest rate differential. So interest rates going up in the US and staying low in Japan and coming lower. That's basically led to all this move. Okay, it took us all the way up from 115, 113, 114 type of zone, all the way up to 161. Okay, now what's happening is interest rate cycle is changing. Interest rates are likely now to start dropping in the US, and they're mostly likely to start rising in Japan. That means there's a huge amount of huge amounts of trades that need to be unwound at some point. I'm not talking about, us here on MT4 and MT5. I'm talking about the pension funds. I'm talking about the hedge funds that have all basically got this trade going on. There's a huge amount of trade that we'll see that can potentially reverse over the months ahead. Okay, when those interest rates start moving, and even a 50% move from where it all started, which is basically there to there, 50% move. Well, I have been talking about this for a while, haven't I? If you've been following me at all, we almost got down to the 50% move down there at 138, and then it bounced off it twice. So, well, there's proof in the pudding. It's not just me talking about this; it's others. I mean, if you want to draw it even more accurately, it's almost bang on where the bounce was, and I wouldn't be surprised to see this level challenged at some point in the weeks ahead, as the interest rates start to move. And again, not that I'm a Fibonacci trader at all, but this retracement here, back down to 71, come down at 128, and then back down. So I think for longer term plays, sit on a beach by selling the dollar and buying the yen. This time next year, you must be made your percentage gains that you so desire. But there you are. At the moment, I think the bias is obviously, the dollar is sort of weak across the board anyway. But I think the general consensus is that we're going to see, a stronger yen in the time to come. And indices, quick look at indices, and then we'll wrap it up. All-time highs in the stock markets, trading higher, not fighting it. Trade your strategy. If you don't have a strategy, you're gambling. I can tell you that now. And there's lots of gamblers out there. You've got to have a strategy, set of rules that you have confidence in. For me, the boomerang trend takes you to there. Entries, swing low, profit target. Well, as I say, profit targets with all-time highs sometimes is best to just look at 100% extensions of breakout zones. And that would be my bias on there. Right, well, I'll leave it there then. The chat's completely dried up, so no one's talking to me. So you don't want to talk to me, I won't talk to you. That's Rana. Oh, thank you. Good to see you. Tabada. Good to see you. Have you had a go at the Guess the Gold? Why not have more than one winner broadcast with you every week? Well, because it's not a giveaway show. It's an education show. That's just a little bit of a bonus. Thank you for your... I'm just turning this into a raffle every week. What if I had 3641 as well? No. If you had the same winner, if you were the same, then it's the first one that got it in at that price. Are you telling me, Pat Sub, that you did have it at 3641? Daviston, hello to you again. Good to see you. Long time no speak. Thank you for saying hello. Thought I was just sitting here talking to myself. Thank you. Good to see you again. Good stuff. Right, folks, I'll leave that there now. Thanks for tuning in. Hopefully you learned something. Hopefully you don't just look at this stream as a gold giveaway. Hopefully you learned something. Hopefully you're serious about trading. There's a 20% discount. If the funds are tight, well, take advantage of the 20% discount, instant funding. You could be trading live money. I'm not saying you should do this, but you could trade money, and by the end of the week, you could be taking a withdrawal. But I'm not saying you should do that. thoughts on Aussie dollar long this week? Yeah, lots to play for. Aussie's coming back. This is normally quite a good setup for a pullback, Davison. This is against. This is well with the trend. The Aussie dollar's coming back. Dollar is weak. Normally, when you see two currency pairs going in opposite directions, normally when you see two currency pairs going, there we go, excuse me a sec. What happened there? Normally when you see this with currencies, one going up, one going down, that's the trend, yeah? What you really remember, trading is all about getting an edge. Trading is all about getting an edge, and if you see both currency pairs converging, that trend has more likely to be a reversal because it means both currencies are converging. What we like to see when we're looking for pullbacks is one currency pulling back, but the other still in the same direction. So here at the moment, you've got the green line, which is this US dollar. You've got the Aussie dollar, which has been getting stronger, but the Aussie's now putting back. Okay, the Aussie's putting back, which is a good potential for trend continuation on that. Remember, it's all about strength over weakness. So Aussie against the dollar. Let's have a look at the chart to see if there's any setups. Aussie against the dollar is down here. Double top. You don't buy it here, do you? But it's a great trendy market. I mean, had you been following the boomerangs, guys, you'd have been there. You'd have been long this now, back down from 66.28. If you're following the boomerangs, if you don't know what the boomerang is, well, as I say, you can get all that information on the PropIQ. I like it. I don't know where your roadblock resistance will be. There most probably isn't one. I mean, again, this extension level, I'm just looking at the extension there. You know, you've got that to there. That's basically almost where the high was. I would say target 67.16. Well, 60 is a bit too accurate. That 67 sort of 20 or 30 for me. Aussie's most probably not likely to cut rates again at the moment. Just bear with me a second. Pat, are you Pat? Judith, Patience Judith, Pat sub. Pat sub. I don't see your entrance from last week, Pat sub. So don't think so. If you're Pat, anyway, let me know. Pat sub does not have a guess in last week's competition. Hi Andrew, are you against the use of Fibonacci? No, I'm not against it. Not against it. I'm not. Look, that's a good question, James Lee. I mean, the you know, the I mean, Fibonacci, it's just another form of technical analysis. I love a 50% pullback, right? 50% is not a Fibonacci number. Okay, Fibonacci is a number sequence that comes from adding a number and dividing the third number, the seventh number in the sequence by the third number in the sequence, and so forth. You can watch my video on Fibonacci number sequencing if you want. But it's only relevant because people use it. But I don't think it's something that really, I mean, it's just I give it the same weight that I give to all technical analysis. At the end of the day, technical analysis is useful because it gives people a reason not to trade, i.e., you only trade when certain criteria is met, and people do need that. But I don't necessarily think that the extension levels and the pullback levels is anything more than that. So I'm not against it. It works for a lot of people. I know. I mean, the banks, when I used to work in the city, we didn't look at it. We used to have a morning meeting before the markets opened at 6:30 in the morning, and the technical team would come down, and the only thing that we really looked at in those days, and this is when we were trading in the pits, the only thing we looked at was basically the 200 moving average. That's all that we looked at. So there you have it. But thanks. Good question. So Pat, Patience Judith. Let's have a look. Patience Judith. If you got it right, then I would. Well, you didn't get it right. So you didn't. Let me just share with you that. Patience Judith, bear with me. There you go. You came in at 3649, Pat. There you are. 3649 was your reading, not 3641. I would have given it to you on this occasion, but normally it's the first getting in there with the right answer, or the nearest answer would win. But you were very close, so well done. You came in close, 3649, but not quite close enough on this occasion. Right, folks, thanks very much for tuning in. Appreciate your time, appreciate your company. Thanks for the feedback. Remember, these streams do run better if indeed we do get feedback. So I love the questions when they come in, so keep them coming for next week. I'll see you next Monday for the week ahead live stream. No trivia giveaway this week, but we'll do the gold again this time next week. So I'll look forward to seeing you there. Have a good week. Remember, lots to play for this week. Lots going on in the central bank market, and potentially lots going on in the stocks, and of course the gold dollar as well. Thanks, folks. Cheerio.